Dollar in free fall, U.S. cuts loom now.
America's dollar power cracks. First loss revealed.
The world just dumped the dollar. America bleeds.
Dollar collapse warning. What Americans lose first.
The dollar isn't just slipping, it's crashing. And when it breaks, America breaks with it. Overnight, Social Security checks freeze, military pay stalls, Medicare funding dries up. These aren't distant warnings. They're the first cuts that hit when the world stops trusting the US dollar. For nearly 80 years, the US dollar has been the undisputed king of global finance. It's not just America's currency, it's the world's. More than 58% of all global reserves are held in dollars. Over 80% of international trade transactions are cleared in dollars. That power gave America something extraordinary: the ability to spend, to borrow, to print money without immediate collapse. It let Washington promise benefits, fund wars, and sustain programs that no other nation could dream of. But that dominance is cracking. Nations from China to Russia to Brazil are openly trading in other currencies. BRICS nations are pushing for alternatives. Even Europe is exploring ways to reduce dollar dependence. And the US, drowning in $34.7 trillion in national debt, is never been more vulnerable. When the dollar goes, the free ride ends. And here's the part no one in Washington will say out loud. When the dollar collapses, it won't start with Wall Street billionaires losing money. It will start with you. The first cuts won't be invisible. They'll slice straight into the services ordinary Americans depend on. Social Security is the backbone of retirement for over 71 million Americans. Every month, checks go out, funded by trust funds already under strain. According to the Social Security Trustees Report, those funds will run dry by 2033 without reform.
Now add a dollar collapse. A weaker dollar means higher borrowing costs. Interest rates spike. Washington's debt payments balloon, already at $892 billion a year just in interest. Where will the government find the cash? By freezing, delaying, or cutting Social Security checks. Imagine it, retirees waiting for the money they depend on, only to be told the system is temporarily suspended. That's not speculation. In 2011, during the debt ceiling standoff, officials quietly admitted Social Security checks could be delayed if Treasury ran out of cash. Now magnify that by a global dollar collapse. The safety net snaps first. For decades, the US military has operated with a blank check. Bases in over 70 countries, a defense budget topping $850 billion a year. But defense depends on debt. Treasury bonds fund much of it. And those bonds are bought by foreign governments, China, Japan, Europe, because they trust the dollar. Strip away that trust, and buyers vanish. But suddenly, Pentagon payrolls are at risk. Soldiers, sailors, airmen, all waiting for money that isn't there. The world's most powerful military, unpaid. This isn't hypothetical. In 2013, during a government shutdown, thousands of civilian defense employees were furloughed. Contractors went unpaid. Training exercises halted. That was just a shutdown. A dollar collapse would make it permanent. Over 65 million Americans rely on Medicare. Its funding depends heavily on federal borrowing. Already, Medicare Part A is projected to face insolvency by 2031. Add collapsing dollar power, and the cracks become gaping holes. Washington's choices? Slash reimbursements to hospitals, cut benefits, or simply delay payments. Doctors walk away. Clinics close doors. Seniors wait months for care that used to take days.
The hidden danger: inflation. A weak dollar means medical imports, everything from drugs to equipment, skyrocket in price. Imagine insulin at $1,200 a month instead of $600. That's the reality when the dollar no longer buys global trust. SNAP, food stamps, feeds over 42 million Americans. It costs about $127 billion annually. Where does that money come from? Federal borrowing. Take away dollar dominance, and SNAP is one of the first programs squeezed. Why? Because unlike defense or debt interest, it's politically optional, and Washington knows foreign creditors care more about bond payments than hungry families. In 2013, during another budget fight, 47 million people saw their food stamp benefits cut. That was during stability. In a collapse, benefits don't just shrink, they vanish. Empty shelves, hungry families, nationwide panic. The dollar collapse doesn't hit one program, it hits all of them, fast. Social Security checks delayed, military pay frozen, Medicare gutted, food stamps gone, school funding slashed, infrastructure projects abandoned. Every cut creates shockwaves. Seniors stop spending, families panic, local economies collapse. The very lifelines that hold American society together are the first sacrifice to keep bond markets calm. And here's the cruelest twist. The elite won't feel it. Washington insiders, hedge fund managers, multinational CEOs, they'll shield themselves with offshore accounts, hard assets, and private security. But ordinary Americans, they'll face the collapse head-on. Paychecks stalled, services gone, bills piling up, and no safety net to catch them. And that's just the beginning. Because once the first lifelines vanish, the deeper collapse begins, affecting global power, trade, and America's very role in the world. The second half of this story reveals what happens when nations stop defending the dollar, when rivals rise, and when ordinary Americans discover that losing dollar dominance means losing more than money. It means losing the world they thought was permanent.
When the first American lifelines snap, Social Security, Medicare, snap, the damage doesn't stop at US borders, it spreads. Because dollar dominance isn't just about America, it's about the world's financial bloodstream. And when that bloodstream clots, every nation feels the shock. For decades, countries held dollars because they trusted America. Oil contracts were priced in dollars. International trade cleared through New York banks. US Treasury bonds were seen as the safest asset on earth. But cracks are widening. BRICS nations, Brazil, Russia, India, China, South Africa, are actively pushing alternatives. In 2024, China and Brazil finalized a deal to trade in yuan. Saudi Arabia, the backbone of the petrodollar system, openly explored selling oil and currencies other than the dollar. When that shift accelerates, foreign demand for US bonds plummets. That means higher interest rates. Washington already spends nearly $1 trillion a year on interest alone, more than on defense. If creditors walk away, America is forced to cannibalize itself, cutting deeper, faster, and harsher. Dollar dominance gave Americans a hidden subsidy. It kept imports cheap. Electronics, clothes, cars, food, shipped from abroad at bargain prices because the dollar was strong. Lose that strength and prices explode. That means gasoline at $8 a gallon, imported cars doubling in price, grocery bills rising 40% in a single year. Remember the inflation panic of 2022-2023, when prices surged after the pandemic and war in Ukraine. That was with the dollar still strong. Imagine those spikes multiplied permanently. The Pentagon doesn't just protect America, it enforces the dollar system itself. US power rests on aircraft carriers, overseas bases, and defense treaties that guarantee the flow of trade.
Strip away the dollar's dominance and America's ability to project power shrinks overnight. Defense contractors go unpaid, foreign bases shutter, allies lose faith, rivals move in. China, already expanding its military presence, fills the vacuum. Russia seizes influence in Europe and Africa. The Middle East tilts toward new patrons. The American century becomes history, not in decades, but in years. And ordinary Americans feel it when allies stop supporting US policies, when global trade reroutes, and when foreign wars become unwinnable. Here's the vicious cycle. As the dollar weakens, Washington borrows more to cover exploding costs. Higher borrowing leads to higher interest payments. Those payments demand deeper cuts. Cuts weaken the economy, driving more borrowing. This is the debt spiral. The Congressional Budget Office already projects U.S. debt will hit 134% of GDP by 2029. That's higher than at the end of World War II. Back then, America had industrial dominance to pay it down. Today, manufacturing is hollowed out. Trade deficits are permanent. There is no escape hatch. So what does this mean for daily life? Imagine your Social Security check arrives late or not at all. Your military paycheck bounces. Your Medicare coverage shrinks while drug prices double. Food assistance ends as grocery bills skyrocket. Gas costs more than rent. All while elites retreat to gated estates insulated by wealth and assets abroad. Washington talks of shared sacrifice, but you already know, the cuts always hit Main Street first. Once dollar dominance dies, new systems rise. China pushes the yuan. BRICS create alternative clearinghouses. Digital currencies, state-backed, not private crypto, become tools of global trade. America, once the unquestioned banker of the world, becomes just another borrower. That means U.S. sanctions lose power. The Treasury can no longer weaponize the dollar to punish nations. Suddenly, rivals operate free from American control.
And here's the hardest truth. Without dollar dominance, America loses not just influence abroad, but stability at home. The full faith and credit of the United States, the promise that built the modern world, becomes just another fragile pledge in a broken system. Analysts sketch three possible futures. Controlled decline, the dollar slowly loses share, replaced by a basket of currencies. Cuts are painful but gradual. Sudden collapse, a global shock, war, sanctions, financial crisis, triggers a rush out of dollars. Cuts are immediate, services vanish overnight. Bifurcated system, rival blocs emerge, US allies still use the dollar while BRICS nations form an alternative. The result? Higher costs, permanent inflation, and weaker services for Americans. Which scenario wins? That depends on global trust, and right now, trust is evaporating. The dollar's collapse isn't just about money, it's about power, it's about survival. It's about whether America can continue to promise lifelines it no longer has the strength to fund. When dollar dominance dies, the first cuts aren't symbolic, they're brutal. Social Security, Medicare, food assistance, defense, the very services Americans believe untouchable, they're the first to go. And when they vanish, a new question rises. What holds America together when the currency that built it no longer does? The collapse of the dollar won't just change wallets, it will change the country itself. The only question left, are Americans prepared for the world after dollar power?